Sometimes I'm asked how I get inspiration for my columns. For me, it's a combination of reporting on macro trends in our real estate market, giving advice to my clients, addressing issues that have arisen in transactions, and observing happenings with the business owners I counsel. Occasionally, a column idea falls from the sky, and that's what happened today. So let me set a stage for you. I received an email from a client who recently relocated his business to a smaller lease location. The previous business address is owned. Upon my client's vacation of the premises, he leased it to a neighbor. His plans in the near term are to move to a boarding estate. Continue to own real estate, the property would create an undue tax burden on the income received versus selling the asset and redeploying the proceeds into a lease building in a tax-friendly state. This is what his motivation to sell was. My client asked what considerations should be given for the framework of the lease agreement, allowing for marketability and security. And here's the advice I offered. The lease should reflect a market lease rate, or at least as close as you can get. Value is a return on the rent paid. Considering swapping a couple months free to get a higher rent figure is definitely an option. Build in sufficient annual increases to the rent. Most are written in with 4% bumps these days. All purchase rights options, rights of first refusal, right of first offer should be eliminated. Make sure the tenant is responsible for paying all property tax increases when the property is reassessed after the sale. The AIR, Single Tenant Net Lease, is widely used to document the deal. It's common and most investors are familiar. Most investors want a relatively new roof and HVAC units. Under a triple net lease, your tenant is responsible for maintenance or repair of these items, but replacement is the owner's responsibility, which can then be billed to the tenant monthly over 12 years. So consider replacing these before the sale. These days, a 5-year lease minimum is kind of the standard. 7 to 10 is obviously much better, especially if you have the 4% rent kickers. Finally, credit of the tenant is huge. You'll want to have 2 years of P&Ls, balance sheets, and corporate tax returns on hand. I'd see if you can get the principals to personally guarantee the lease to add a layer of security. Now, if you're in the experience of an experienced commercial real estate broker, I can be reached at 281-222-0433. Thank you for your time and have a good day.